Hello and good morning, listeners. Welcome back to Almus Market Mornings. This is Shikhar Garg along with Jayaram Krishnamurthy, bringing in the updates for the day. Now, we have quite a start for the week with all the festivities around, and even the financial markets seem to be rejoicing. The equities continue to soar high, just like those paper kites, and our Indian currency also strengthened against the dollar, while gold glittered a bit more brighter. Now, among all this, there's still some concerns from the geopolitics. So, JK, what do you think? How would we begin this week with USDINR breaking the range after months of consolidation? What should we expect?
Hey, good morning, Shikhar. Yeah, I think the rupee had very long period of range movement between 83 and 83, 30, 40 kind of band, but that seems to have broken now clearly. We had 2 days close of below 83, and what more, we also had a break of 80 to 90, the crucial support that was encouraging for the dollar bears, and we had tested 80 to 80 even in the NDF market after the release of PPI numbers, where since then we have been consolidating in a small range, waiting for more cues from the domestic flows as well as from the global market. But yes, I think we can have some more follow through with RBI being okay with it, and flows supporting 80 to 70 and 80 to 50 are the next big supports that we need to watch. And on the upside, any break back above 83.10 will put some doubts for the dollar bears, and that can clearly be a stop for any short positions that is maintained. Now that apart, markets and economic observers have been focused on inflation trajectory, more particularly in the US, as the central bank there has in official words expressed that rate cuts will happen this year. But markets have much more expectation on the extent of rate cuts and the timing of the same. And in this context, CPI and PPI inflation numbers announced last week assumed a lot of importance. While CPI did come slightly on the higher side, PPI numbers on Friday went the other way. Headline as well as core came lower than expected. Month-on-month headline actually showed a fall in the wholesale prices, and that was a fall for the third month in succession. And when it falls 3 months in a succession, there is a confirmation that there is absolutely no supply side pressures on prices. Producers are not finding facing costs that need to be pushed through to consumers, and this will eventually have an impact on the consumer prices as well. So markets had had something to rejoice again. Markets had actually not reacted negatively to the CPI number, and they were encouraged further by PPI numbers as well. Now, before we go into the market specific, we also have to look at how the officials reacted. Bostic, the Atlanta president, he was expecting a much slower progression on inflation moving forward, and that some risks that inflation may stall altogether. Then we also had statement from Goolsbee that most the PPI data is the most noisy and least predictive, and we don't take much heart from it. So these are the statements that markets actually ignored these statements and went on buying more bonds, particularly in the shorter tenor. And the shorter tenor, the 2-year bond yield actually fell more again on Friday. Overall, for in the last 1 week, the 2-year yields have fallen by 25 basis points, 10-year much less by 10 basis points, and 3-year by 30-year points. And if you look at the expectations of the market, there is still a 76% probability of a rate cut in March, 6 cuts rate expectation being unchanged. Now, if you look at the equity markets, while the profit projections by major banks like JP Morgan and the Citi were more or less in line with expectation, but markets were actually slightly down, perhaps taking cues from the continued geopolitical tensions in the Red Sea area. But that was about the US market. But if you look at the European stocks, they rose 0.84%, and even the global, composite index rose by 0.22%. But what stands out is the Chinese composite index, which is 5% away from the pandemic low of 2020, and that contrasts with the major markets which have been making all-time highs for several weeks now. So the Chinese authorities really have to make some drastic moves to support the market. But that was not to be today when they announced the medium-term loan facility and maintained the rate at 2.5%, while the market had expected 0.1% cut in the rate, and that must have been really disappointing to the market. We also had a weekend election in Taiwan, and the election of Democratic Progressive Party evoked not so I would say displeasing comments from the Chinese side, and that was to be expected, because the leader of the DPP party had in earlier occasions and for several times expressed that he was for independence of Taiwan. And what is important from the global perspective is whether what action would what this would mean for Chinese action on the Taiwanese region going forward. Looking at the way Chinese economy is placed and their preoccupation with supporting and lifting the domestic economy, China is not in a position to make any move on the geopolitical side, and this issue will still remain in the suspense. But I think because this is the third term that this DPP party has come back to power, and they will keep pushing their agenda of independence of Taiwan, and to that extent, China will keep its protests, and perhaps some action at a later stage is what the market is expecting. So that is about the Taiwanese side, and we also have an important event, global event at Davos, the mountain city of Switzerland, which hosts every year a highly curated selection of delegates from global businesses, governments, civil society, media, and academia, covering converging on the Swiss town to attend sessions designated to spark fruitful discussions around the most pressing issues of the day, and trying to derive some impact. In this year's meeting, it will be surrounding the rebuilding of trust in an environment of rapid transformation. We will have a lot of leaders from the business side as well as from the political side, global leaders speaking in various forums, formal and informal. All of that will be coming out in the coming week, and we will try to focus and get what is more important from our perspective for the global markets and the economy going forward, and we will definitely be updating you on these. So we start the day with the US holiday, so maybe the global markets are going to be quiet, but Indian rupee having come to some important levels, need to watch whether RBI continues its grip on the currency or lets it move according to markets wills. So we'll just wait. So I think this week again we have the Indian trade data, which will be again parsed for whether the trade numbers are improving further or unlikely, because we are already at 20 billion for the month of November, and looking at our increased imports due to the growth trajectory, I think the deficit is unlikely to come down much more than this. So any deviation will have some impact on the INR. Overall, some short-term bullish bias for the rupee. Thank you.
That was pretty good and precise. I mean, folks, yes, this week we have the trade data, which can be out of a little bit concern with the trade deficit of the bias. But other than that, there has been the break of the consolidating range for USDINR after the longest time. The possibility of some more follow through does exist with the central bank also. Other than that, on the global front, we have the CPI and the PPI data being released this week, which kind of said that, or in a way, indicated lower, but the market still ignored the above set of updates, which led to further buying of bonds. Even the probability of rate cuts stay at 6% currently after seeing such data points. Market is undeterred with their expectations of the rate cuts. What's quite interesting to observe, and something that JK mentioned, is the fact that Chinese composite, the index, is 5% away from the COVID lows, and it is of quite stark contrast from the global indices with European indices, Indian indices, and many more. Hovering around all-time highs or making new all-time highs on the past few weeks. The last bit of the update for the day today is the Taiwanese elections over the weekend, and the one of the major agenda points of the incumbent parties is the independence of Taiwan, which is still quite a dicey update that we are still observing. Apart from that, we have the US holiday today on account of Martin Luther King. So the outward transactions will not be happening today, folks. Request you to please plan your transactions accordingly. That's it for today, folks. We shall be coming again tomorrow with another round of updates. Thank you so much for listening.